Hi, this is the Price Action Analyst. Welcome to my YouTube channel. Quick announcement. For people that are new, I run a subscription service to a cryptocurrency, I guess, trading guide. And that previously has been in the form of a model portfolio, which I update and send out every night, and that model portfolio was just large cap cryptocurrencies. So the service has now been expanded to include a small cap cryptocurrency model portfolio as well. So there's essentially double the amount of cryptocurrencies within the purview of the service. And so there's an update for the large caps on one day, and then on the next day there'll be an update for the small caps, and so just go back and forth. So if you're interested in that, check it out. All the information's in the description box of my videos. Also, if you like this video at the end, please like it. Please subscribe to the channel. And so this video is, I've had a number of requests. I've been busy doing the updates to the small cap portfolio. So I normally do individual video responses, but in this one I'm just going to do them all in one video so I can save some time. So these are all requests from subscribers for video responses, and again, if you're subscribing to the service, then those requests sort of take priority over other requests. So the first one is ANKR, and this is in the Bitcoin pair. So where our data is going back to 2019, and then I guess it's gone down and consolidated, and then it started to push up around July, and we've had volume spikes. So you've got your first leg, a relatively deep retrace, and then a really big push up, and that push up's made a new high, which is important. And again, volume has picked up during that, and it's dropped off in this retrace, which is a good sign. So I've marked up the support and resistance lines. This is very strong. This retrace looks relatively weak. I would expect the wick on this first push down to play a role as well as a support level. So you can see as price is coming down into that, it's being bought up. But we do have corresponding wicks on the opposite end, which has seen price come back inside. So how I would play this is two things are really going to happen. Buying support is going to come in here and it's going to push out of here. So this is kind of like a deep wash of support. Or it's going to fool you and it's going to come down and test this support. And then you're kind of retesting this previous high on air. And so there's going to be likely a lot of buying support if it gets down here. So the retrace is either going to be shallow or it's going to be deep, and then it's going to push out of here. That's kind of my expectation. And so how I would, you don't want to get suckered into price coming down if you can help it. So the way that I would avoid that is I would then look on the hourly time frame. So the green lines are that initial wick. Again, look at price when it comes in here. So now it's, it's downtrending, and you've got momentum on the downside, but there's a wick here. We're still inside this wick. So I never like to buy the initial retrace. You got big momentum, you got a retrace here. What I would say is if you want to buy it here, because you're still in this ideal zone on the wick, and if you're wrong, we're at 104, support here is at 8.5. I mean, it's substantial percentage wise. It's 20 to 30%. But you could buy in this range here. What I would do though is I would wait for, the buying here is not substantial because you've got this bar. So wait for price to push up, and wait for like a retrace here. and then if you get a big buying bar off that that's more substantial than your previous selling bars, buy that one. Because this is what happens here. You got this strong momentum down, price will come up here and it'll almost always retest this low, because the momentum's downward, so it'll come up here, sucker everyone in, and push down. So what you want to do is you want to see what happens on the push down here, and you want to see a substantial buying bar. And again, so if you get a weak retrace, like you get 3 or 4 small red bars and then a big buying bar as it comes into this wick, that's your entry trigger. That sort of, that signals that this is going to hold, price is going to push up. But then, there's always risks. The risks are, it just, you wait for that, it just pushes out of here. That's low probability from my experience. The other risk is, that buying bar paints in, it comes up here and then just cycles back down. Again, that's low probability, but nothing is certain in this game. But that's how I would play the entry. Wait for this to come up. It'll probably leave some wicks. It'll retrace. As soon as you get substantial buying, I would hit that. And if you don't, if it retraces and you get big buying, big selling bars, then it's indicative that price is going to wash this, not just wash it, but push through and come down to support. So, knowing that this is likely to retrace and knowing I want a big buying bar to get in will keep me out if it just retraces and just pushes down. That's how I want to stay out of price if it's going to push down here. So that's how I would avoid that. So, but overall, that's close to a buy. If the buy is not in this green zone, the buy will likely be down in this zone here. But if price goes up and retraces and makes a big buying bar, so it's holding this trend, it's still within this green area, I would buy that. Because, on the daily, when you look at it, this is very strong, This is the momentum here. This is the momentum on the downside, it's not very strong. So that's indicative that, this retrace is going to be shallow. And so what you're waiting for is that, and it's, if this forms another wick here, that's probably it. So close to an entry on ANKR. Next one is VIDT. So this is a similar chart, except it didn't go high and come down. It sort of tried to push up, but it's basically been consolidating. And then you've had this push out, and volume has spiked, but you don't see this very consistently large volume here, which is a good thing. It means this is highly traded. I don't know anything about this coin. So push out, and see how it pushes out and retraces and then pushes. Always want to try and hit the retrace. And then it's pushed up to resistance, come all the way back. There's your air there. Wash support, wash these pivots. See, and this wash here, see how it's between the two previous pivots. Whenever I get, those aren't very sharp pivots, but whenever I get 2 pivot points, I almost sometimes, when I'm short-term trading, I'll just have a buy order right between the 2 pivots, because price, you see that a lot. But anyways, come down to support, and then we've had this big push up, so maybe first leg and then a big second leg, and that now is, so this concerns me. That is indication that you're going to get a strong retrace. Again, it's fighting the upward momentum, but when I see that, it's it makes me I notice that. And the other thing is, if you look at these in bars, this is untested price action on the daily. So, I've put a green line here because that is a previous high and air. So price is kind of always attracted to that. And, short term, it'll try and suck you into a buy, and then it'll just come back on you. So you want to try and avoid that. So if we come into the hourly chart, this is the air and the green line and the previous high. So if price does get down here, expect buying support off that. Almost, you know, very high probability. Will it get down there? Don't know. So, you know, again, these legs are more obvious here. 1, 2 legs. So you've got upward bias here. And this consolidation's in between support and resistance. So what I'd really want here is to see, if you want to play it really safe, wait for that and hit that long, because that is then a confirmation that, all right, price is not coming down any further. It's broken out of here on the upside. Wait for the retrace and hit that long. That's your safest way to play this. If you want to add more excitement to your life, you can, well, I mean, I don't want to frame it like that. So if you're really short-term trading, as price comes down here, you've just got a buy order and then you hope it returns, but there's no need to do that here. If price, you know, pushes out of this consolidation pattern on the downside, see how price paints in. If it comes out and leaves a big wick and comes back inside, that's your entry trigger. Especially if it, you know, like I said before, you got a bottom here and a bottom here on the wick. Watch between those two. I'm not saying just get long there, but watch what price does kind of in these areas. So anywhere, you know, I'm looking at price between these two wicks. I'm looking at, you know, this wick here. I'm looking at this air. So, you know, the high probability event is that, you know, if price, and you've got this trend line, so if price manages to push out of here, there's a whole bunch of reasons it's going to get bought back up. So, you know, if price goes this way, let it go this way, and then just watch to see what happens as a result. If it comes in here and makes big bearish engulfing bars, hopefully everyone knows what that is. It means the bar closes on its low, and it closes here. Then you know that, and the next bar opens and pushes down, you know that price is coming down here, right? So, you know, when I was trading short term, if you get a big bearish bar and it closes, you know, past this low and it closes on its low, I'll almost get short on the break of that bar. And, you know, you might take some heat, but the overwhelmingly high probability thing is then as price is going to cycle down to support. So if it comes down this way, just let it do its thing and see what happens. If you see wicks and you see buying bars, that's your entry trigger. If it pushes out of here and breaks, hit the retest long. That's how I would play that. But overall, I think you could safely say that you want to sort of look to get long that, because the momentum on the upside is very strong. And this is new highs. You know, as you, oh, sorry, I'm thinking about the previous one. But, you know, well, I won't talk about that because it's not a new high, but just, you know, I would be looking for a long entry there, just in the context of this push up. But just remember, even though I'm looking here, price always likes to come back and fill this air. So maybe, you know, maybe it comes down here and pushes out, and then, you know, at a much later date fills this air. But, you know, it's a safe bet that at some stage that'll be filled. So, you know, if it does what I says and get down here and makes an entry trigger, you have to hit that. I'm not saying wait. I'm just saying, you know, all right, that's indicative that it's not going to fill the air on this run, but, you know, very rarely is that left untested. Here's a good example. Here, you know, it's almost like a magnet. It just, price likes to come back and fill. It doesn't like to leave untested air. But then you know, it's not a guarantee of anything. But this is different here. You know, the difference between this and this is that, you know, you've got lows here in air, and when price comes and washes that, then it's going to move up You know, whenever that's why I always like to see, you know, if this bar here had only come down to here, I'm much less confident it's going to push up. I like to see the pivot washes. I like to see the air fill, and I like to see pivot washes like that, and then strength. I'm much more confident now that you're going to get a push up. Okay, let's move on to the next one, which was FET. So I prefer this sort of stuff. And again, you know, I don't have stats to back it up or anything like that. But, you know, where the coins we looked at are new and they've consolidated and then pushed up, I prefer, I don't know, and I have no reason, but I prefer this kind of price action here because, you know, when it's consolidated, in my mind, you know, when it's been a long time consolidating like that, you know, it's not pushed down any further, it's consolidated. And when it starts to break out, then it means it's just coming up and chipping away at all these previous levels. And so, I don't know, again, I have nothing to base that on, but I like to see a price history. And you know, the advantage is when it starts to push up here, you know I can see where it's gonna be weak, right? If you're looking to take profits, you know, I know where those levels are. I expect, you know, if it's coming up to this peak, or it's halfway in between these two, or it's here, some area here is going to be weakness. So if I'm in this and it comes up here and makes a big wick here, that's an ideal, you know, take profit zone, and then wait and see what happens. So anyways, this coin's a little bit different to the other ones because it's got that history. So if we look though, it's, you know, consolidated, and then we've had this big push up. So this is definitely uptrending, which is good. All the coins that we've looked at so far are uptrending. And a similar story here, but again, that's very ominous to me. So watch this. You know, I would just on the daily chart, I expect this to be deeper than that. Very rarely will this, you know, with that overhead, very rarely will that just push out of here. It's just very low probability. It'll push up into this wick. You know, this wick is still very much an ideal. You know, if you have this and you're looking to take profits, when this pushes up to, you know, if from here this just rockets up into that level, sell it, because it's very, very high probability that price, if it gets up there, it's coming back inside. So if you're looking for a, you know, a take profit, that would be it. So, but this is strong nonetheless. I just, with that big wick overhead, expect this retrace to be deeper than it is, just looking at the daily bar. So if we go into the hourly bars, yeah, and this is where, you know, trading gets nuanced, because this is the trick. But this is exactly what I was saying about the other one, right? So you've got your consolidation pattern, price pushes out, it starts to make, you know, bearish engulfing bars, and then, but where is it making these bars? And again, see these two peaks here? You know, this is roughly halfway. All right, it's washed this pivot. But, you know, if you're just sitting here with a long thing, you haven't taken much heat, and now you're making money. So, you know, this is where it gets kind of tricky, because on the daily bars, I'm expecting this retrace to go deeper, but now on the hourly, like that's starting to look like you might want to buy it. But here's the thing that would keep you out of it. You've got stronger momentum still on the downside. So I would watch this here. So I'd be looking for an entry, because this looks like, you know, inside support, and it looks, now that this has washed this pivot and come up so strong, what I would do is I would wait. You know, you've got air here, and you've got this trend line. So let price push up here, and then it's again, high probability is you get some sort of retrace off of this, and then I would wait and see what this looks like. So it's the philosophy or the approach that I told you here. You know, as price comes down into this area, you want to wait to see what it looks like, to see if it gives you an entry trigger. So this is kind of an entry trigger, except the momentum's still on the downside. So wait for price to get up here and retrace, and then do the same exercise. So if you see that any buying off of this retrace, that is your entry long. Hit that. So for example, if it comes down, leaves me another wick, or it comes down here, whatever, and then there's a big buying bar, that is your entry signal. That's your long. You just, it's very hard for me to not get involved when that happens, something like that. But you know, it's also high probability that you get some sort of retrace off that. So exactly what I told you on this video and that video. Wait for the retrace and then repeat the exercise. So it's kind of like this here. You've got this momentum and you've got the wicks, all right? But price pushes up a little bit and then you get your retrace. And this is short term. But that big buying bar, so as price comes down in these wicks, you get that big buying bar. There's your entry. This is indicative that this low is going to hold. So you've got it coming down, price pushed up, there's your retrace, and then the buying bar. So it's the same philosophy, just there's more bars involved here. Down, this is these two up bars is like this blue one. So expect the retrace, which is going to be your third one, and then see what happens off the back of it. You get another wick or you get a buying bar, that is your entry. So again, that looks close. Just wait to see what happens there. So we'll move on to, we got two more. Actually, you know what? I'm gonna just finish up here, and I'll post this video. And while that is processing, I will do the next two videos in a separate video. So thank you for watching. I hope that is helpful, and I'll see you in the next video. Thank you.